that's the broader vision that we're trying to enable, is investments in all those things, where you can kind of find non-correlated market returns, and hopefully beat the market in some way without overextending yourself.
On this episode of Early Bird, Matt McGay, co-founder and co-CEO of the startup investing platform Allow. Matt joins the podcast today to talk about alternative investing for the average investor, including the current state of alternatives in 2022 and what investors should know before going into alternatives. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. Matt, welcome to the Early Bird podcast. How are you doing?
Good. Thanks for having me.
Well, thank you so much for coming. Really do appreciate it. Today, we're talking about alternative investing, what it means for retail traders in 2022. But before that, Matt, what should the audience know about you? If you could, in about 30 seconds or so, give the audience a little Reader's Digest on your background.
Yeah, so my name is Matt McGay. I'm co-founder of Allow Invest with Peter Sweeney. I grew up in Los Angeles originally, went to Penn where I studied finance and accounting at Wharton, and then did about 3 years at Goldman Sachs doing healthcare investment banking. Peter also worked at Goldman Sachs doing tech investment banking in their equity capital markets division.
Okay, so you guys have a lot of finance background. And you have your platform. That's really cool. It's Allow, right? It allows you to invest in brands with influencers. It's an alternative investment platform, so to speak, right? Because you're investing in startups.
Exactly. Exactly. We offer private investing opportunities to those that don't usually have them being non-accredited investors.
That's excellent, and I'm excited because we're going to be talking about the alternative market this year. I guess in a nutshell, how would you describe the alternative investing market right now in 2022?
Yeah, I mean, I think broadly, 2022 has been a rough place for the public market, so people are kind of looking elsewhere to diversify. I think there's a bunch of opportunities that you can see in the venture capital landscape. If you go back in the past 10 years and you look at, previous downturns, VC tends to be an outperforming asset class. And I think, we're seeing a lot of hype around, seed to Series A companies, whereas, later stage companies are kind of batting down the hatches. But the seed to Series A companies themselves, I think investors are kind of looking at it as, if you believe in it now, you believe in the vision, you're believing in the broad vision for the company, rather than, bottom line margins like they do for later stage companies.
Yeah, that's certainly unique about those early stage startups. And I guess with your platform, certainly there are a ton of great equity crowdfunding platforms out there that allow the average investor to get a piece of a startup, investing in those startups, getting some equity. Your platform allows users, including those average traders, average investors, to invest alongside influencers, right?
Yeah, exactly. So we start out looking for companies that have a consumer facing focus. So anything from consumer tech to consumer packaged goods, somewhere where companies can benefit from having a community ingrained on their cap table. We think that the influencer in particular offers that kind of on steroids, where they have 100,000 to 1 million followers of the core demographic that a company is looking to target. Over time, you can really decrease customer acquisition cost in a time where customer acquisition cost is rising from Apple tracking transparency and other data privacy regulations that are coming down the pipe.
Nice. I see the benefit of that. It's a brand new platform you have, right? Just started this year, correct?
Yeah, we launched publicly the app in August, so fairly new.
Oh, wow. So yeah, fairly new. I guess you're probably still testing a few things. Alternatives, certainly, this is a year for a lot of investors to look at those alternatives. I'd be lying to you if I told you I didn't invest in alternatives. I think whether it's crypto or real estate or equity crowdfunding, so many different ways for investors to look outside the public markets, especially in a year like this, which can be pretty rough out there. But on the flip side, and certainly we know that investing in startups can be very profitable out there, it does carry some risk, does it
Yeah.
not?
Yeah, I mean, definitely. I think, by virtue of the risk reward, earlier stage companies have, the greater possibility of going all the way to zero, whereas, later stage companies that have reached kind of their target market and are doing, meaningful revenue, they're not going to disappear tomorrow. Whereas, that could happen for startups. And I think that's part of the game you play is, you're trying to get in there, you're trying to really believe in the companies that you're working with. And I think that's kind of where we differentiate ourselves from a lot of equity crowdfunding platforms, where we're being thoughtful about the companies that come onto the platform to raise money. We're not just looking to be kind of a volume player where anyone that needs to raise money will automatically be allowed onto our platform. We're trying to, de-risk it through having these celebrities on their cap table, hopefully providing, ingrained marketing that can help the company grow, reach revenue, reach profitability. And of course, yes, it always carries risks, and that's something we're very upfront about on our platform for retail investors.
Absolutely, and I do want to get back to the risk in a second, but I guess I know your platform is still new. What celebrities, what influencers have teamed up with you for the platform so far?
Yeah, so we launched our first raise on the platform, which is the Plug Drink. It's a liver cure or liver health and hangover cure company. They're doing about 7 million in run rate revenue. Their celebrity influential investors are Jack Harlow, Friday Beers, which is an Instagram account, Brooks Nader, who's an Instagram model. And the idea is that, with Jack Harlow and Friday Beers, you kind of can go after, the college market, the people who are drinking, the people who need that hangover cure, kind of part of their lives. Whereas with Brooks, she's, a health focused 26-year-old that kind of appeals to their core demographic, which is 25 to 35-year-old women. And it kills two birds with one stone of the company being able to go after both of those demographics.
Nice. That's definitely a nice first investment to have on the platform. I guess for a lot of the investors that signed up for the platform, what are some of the things they've been saying? Are they excited to invest alongside those celebrities?
Yeah, I mean, I think we go after a younger type of investor than a lot of equity crowdfunding platforms do. I think the appeal of a product that they've seen in the market that they know that they can touch and feel is really appealing to them. And also, I think they believe in the ability for these influencers and, influential people to storytell and really be able to help a company grow. I mean, if you look at a lot of the most successful companies in the consumer market, specifically over the last year or so, you look at like Liquid Death, Flow Water. Realistically, those are just water companies, and it's almost like their valuations based on the package and ability to tell a story and ability to brand. And I think that's what we're trying to offer. And I think the type of investor that is coming onto our platform really understands that.
Cool. It's a nice approach, by the way. I think it's very interesting.
I appreciate it.
Going back to this discussion about alternatives, we did talk before about some of the risk associated with investing in startups out there, as well as other types of alternatives. I do wonder, given the state of the public markets, given how bad it has been across the public markets, is this 2022 going into 23, is this a good time for average investors to actually look at alternatives, given the risk? Shouldn't this be a time for average investors to focus on more conservative and safer investments instead?
Yeah, I mean, I think it's always the right time. I think obviously you want to be thoughtful about how you're allocating your money. I wouldn't spend an outsized portion of your income or savings on alternative investments. But, I think now is a time where you can get valuations at a pretty reasonable spot compared to where they have been for the last 2 years. They got pretty inflated over time. But I think, regulation crowdfunding does a good job of limiting kind of the amount people are able to put in, that being 10% of your net worth or income. So I think, while it is risky, I think being thoughtful around how much you put in, making sure that, you can afford it, you can afford to lose it. Don't overextend yourself. And I think everyone will be okay. But I always think, it's a good time to dip your toes in the water.
Got it. So it's more, don't invest anything that you're not willing to lose. That goes without
Yep.
saying. But at the same time, be thoughtful and do research. I think those are the keys, right? Before you make any type of alternative investment.
Totally. And we try to assist with that, through education pieces that we put onto the platform to hopefully, give investors some more confidence in their ability to look at an opportunity and really be thoughtful about it.
Good point. When we return, we'll hear from Matt about allocating for alternatives in a portfolio and advice for investors who are interested in alternatives. But first, let me tell you where you can become a more informed investor through Early Bird, a free daily email newsletter. Early Bird has commentary on the latest events and trends in stocks, cryptocurrency, and crowdfunding. With Early Bird's daily weekday email, investors can quickly stay on top of the trends and beat the market. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, back to today's discussion. So, Matt, today we're talking about alternative investing in 2022. We talked about how you can invest alongside influencers on your platform that you have there. Looking at sort of the alternatives market, what else are you seeing beyond investing in startups? How are alternatives sort of faring this year in 2022?
Yeah, I mean, I think if you look at pieces like everything, in an inflationary environment, some of the, watches or art kind of can go down in value, I guess.
Mm-hmm.
But, as we think about it, we kind of view the real value in alternatives being what we call live assets, which are things that are by virtue, people owning them and people interacting with them become more valuable. So that we're starting with startups, that can be music where people, continue to listen to music. Their streaming revenue goes up. That can be movies. People go to the movies, watch it. Sports teams, sports franchises. I think that's the broader vision that we're trying to enable is investments in all those things where you can kind of find non-correlated market returns and hopefully beat the market in some way without overextending yourself.
Makes sense. You want to be able to look at those alternatives, particularly those that are not necessarily tied to the public markets. I understand the reasoning for that. But what happens, let's say, in the future, a few years from now, hopefully less than that, the markets turn things around, get a little better. Is that a time to pull back from alternatives? Or at that point, is it still, let's keep diving into alternatives at that point? What do you think?
I mean, I think as you can continue to be thoughtful about the opportunities that you're assessing, I think as time goes on, capital and capital allocation is going to become more and more democratized, hopefully with the help of Allow. But, I think I don't really think of like the macro environment in a sense, given that we're looking at everything from a long-term vision. Mm-hmm. And we understand everything's cyclical. And I think, any time is the time to go at it and dip your toes in the water, like I said before.
So, Matt, you and I, we're not financial professionals. I always tell listeners and readers for Early Bird, please consult with financial professionals before making any investment decisions. But Definitely. From a very broad, high level, Matt, I'm curious, where do you think alternatives fit in a portfolio for the average investor out there?
Yeah, I mean, I think it obviously depends on your age, your investment objectives. I think for me, as a 26-year-old male, I'm probably more risk taking than a 50-year-old with a family is willing to be. When I look at my personal portfolio, I think it's 50% public markets, not as much fixed income, just by virtue of how much I have to deploy. And then, dipping my toes in a variety of alternatives kind of across with that other 50%, whether it be art, whether it be startups, and hopefully being able to create a kind of well-rounded portfolio that can outperform.
You said something very interesting. You talked about, your age, how you're willing to take on risk. Study after study typically shows that younger investors are more likely to embrace alternatives. Why do you think that is the case? Is it because younger investors have more risk taking than some of the older investors out there? They have time before retirement, or are there other factors at play? What do you think, Matt?
Yeah, I mean, I think it's a mix of all of those things. I think there's probably also some science that can back up kind of brain development and the ability to take on risk and willingness to take on risk. But broadly, when I think about it, I do think it's just a function of time and where I am right now, where I sit. I'm willing to lose some money here or there for the opportunity to create massive wealth. Whereas, down the road, like I might not be if I have a family to provide for, but right now I do think, a lot of people, especially in my age and my position, kind of understand that trade-off. And I think that's something that kind of has come across with crypto as well. Obviously, it recently hasn't gone too well, but, I think it kind of opened up people's eyes to, potential, and obviously a younger demographic was investing in crypto. So I do think it ties.
Absolutely, yeah. I think a lot of young people out there typically embrace those types of alternative investment opportunities more so than older demographics. I think the tide is changing, though. I think a lot of older demographics out there, older investors are looking at alternatives, not just the types of platforms we're talking about, such as your platform, but also gold and real estate. I think there's a lot of opportunities out there for different ages of investors. Matt, what should investors know before diving into an alternative investment?
Yeah, I mean, I think you should do your research for startups. I think, when you're assessing a startup, you should know the industry that they're participating in, and you should know kind of the growth that they've had to date, where their product is, where their product roadmap is going. If you have an opportunity to look at their pitch deck, that's a great place to start. And also just, look at the variety of opportunities that you have available. If startups aren't, the right thing for you, there's other opportunities out there that are, as part of alternatives. But I think, building your kind of education level will give you the confidence to kind of go ahead and start to dabble in the markets.
Good point there. That type of research is valuable. Matt, so I'm just looking at my portfolio. I've done alternative investing, not these types of platforms, but other platforms. I do alternatives. And in fact, this year, I think some of my alternatives are outperforming the public market so far, which is interesting. But I do have to wonder, someone said to me a while ago, there are certainly great equity crowdfunding platforms out there, including yours. You can invest in a startup, get in on those early stages. That's really powerful for investors. But then you also have, on the flip side, you have some startups that are trading over the counter, or they're trading on a different type of exchange, but they're still part of the public markets. And investing in those companies, it's liquid. You can sell at any time usually. Is that sort of a drawback with platforms like yours? It's not liquid?
Yeah, I mean, I would say it's a drawback should the case that someone puts in money that they don't have and they need the liquidity, and then they're not able to get it. But on the other hand, I think it does somewhat protect an investor from trying to time the market. They can be more thoughtful about the positions that they're taking when they take them, knowing that this is a long-term hold, and you really have to have conviction in the opportunity you're going at. And I think a lot of day traders get in trouble because they see the stock market falling, and then they try to sell, and they end up just losing money because they're trying to time the market, trying to play the game. And I think while liquidity is important, and liquidity can definitely be beneficial for people that need it, I think there's also a part of it that can protect people on the front end, as long as they're thoughtful about the opportunities they're taking part in.
Yep, it's not timing the market, it's time in the market. That's the old saying.
Exactly.
Right? Matt, what advice do you have for those retail investors out there who are interested in alternatives?
Yeah, I mean, I think just looking at all of the different opportunities that you have available, I think there's been a lot of startups like mine, not just equity crowdfunding for startups, but equity crowdfunding for real estate, equity crowdfunding basically for art. there's a lot of opportunities that you can invest in alternatives. And, I think just like we said is, building up your education level and kind of getting to a point where you can have conviction in the opportunities you're taking part in is really important. And really just, learn to get yourself to a point where you're willing to do it.
Great advice. Matt, thank you so much for coming on the Early Bird podcast and discussing the state of alternative investments for the average investors in 2022. Before we wrap up today's discussion, I just have one final question for you, and it's the most important question for today's discussion. That question for you, Matt, is what is your favorite item that you've bought this year?
My favorite item I bought this year. I got to think about it for a second. I am a startup founder, so I've been trying to be pretty cognizant of my spending. But I have to say, probably a watch I recently bought. Hopefully, that's both a timepiece to wear and look good, and also something that can hold and retain some value over time.
Cool. Hopefully that is the case. That's awesome. Thank you again to Matt McGay for sharing your insights on alternative investing. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.